Thank you, Mr. Thakur. Ladies and gentlemen, I do believe that after such thought-provoking sessions and so much knowledge floating around, you would want to grasp as much of it as possible. So here we are inviting all your queries before we stop for a short break, requesting all the dignitaries, Mr. Shigehiro Shinozaki, Mr. Ashish Kumar Chauhan, Mr. S. Raman, and Mr. V. Balasubramaniam to come on stage. Ladies and gentlemen, they're all yours.
Good morning, sir. This is Manoj Chandalia from Crown Group. Sir, the first question is that we are having two platforms currently that we are talking about. One is the SME platform of the BSE, and the second is the Emerge platform of NSE. Just like if a company goes for an IPO on the main board, and they generally would list on both the exchanges, which is BSE and NSE, as against that, why are we actually having a concept where we are having two different exchanges, and a company which goes for an IPO cannot be on Emerge as well as on the BSE SME board? Why it has to choose between two boards? That is one first question. Because that would also affect the capability and the access which the investors would be able to get for these shares, and also the marketability for the particular company when they go forward and they want to move to the main board. Because then again, they will be on one exchange if they are on the BSE SME platform, and they want to be also on the NSE main board once they want to move to the NSE, to the main board of both the exchanges.
We would be delighted to have a company on both exchanges. We actually promote companies. We tell them that you can list on both. And there is no bar, there is no stoppage. It's a company's own decision. And they do make decisions based on their own constraints. So at the same time, any company wanting to have their stocks listed on both SME platforms, they are most welcome.
Okay, so there is no regulatory as such restriction for a company coming on both the platforms. It's only that because of the convenience or something in terms of the getting approvals that the companies choose either of the platform.
Correct. I mean, I don't know what constraints they have, but effectively we do tell companies, all the companies, saying you have choice and you should ideally list on both platforms. So that is usually for all investors and all the members of the exchanges. We try to support companies to list on both exchanges.
Okay, thank you.
Good morning, Good morning, sir. I'm Madhu Prasad from Keynote. I have just only one question. It's regarding the informed investors taking a call and investing up to ₹1 lakh. That's acceptable. Yes, he has to read the document and take it. But when he is exiting, why it should be exited in lots, sir? Because what we have noticed is that in a small company, lots of employees are there. They have interest to participate in the investment in the company. We said that, yes, he should be an equity partner, everything is appreciated. But unfortunately, he is not in a position to offer that ₹1 lakh. But maybe subsequently after listing 6 months and 8 months down the line, there might be investors who might have taken a position of 10 lakhs and 15 lakhs. You wouldn't wish to exit in the lots only. That is, lots are fixed in 3,000 shares or 5,000 shares depending upon the price. So why should we put the restriction that you should sell only in lots? Can it not be that, yes, he can sell to the extent he wants? Because normally sale decision is taken to the extent of the requirement only. So if that is what it is, and in the general market also, we permit, and more importantly, the market lots today with dematerialization of share as one as the lot, should there be any restriction? Or would you relax it after 1 year, 2 years, what it is? That's what I just wanted to understand.
Yeah, the way we look at it is when an investor is exiting, there is another investor who is coming in, right? So effectively, if we are saying any investor has to have, basically he has to be a large investor, this is the only way to ensure that it's a large investor. So if an existing investor is exiting, The another investor coming in also has to have 1 lakh rupees. That is the purpose. Second is, as and when the company goes into the main board, then the lot size will become 1. So idea is, once they get promoted, then of course, and it's not from current, I think many of them have 2, 3, 5 crore of issued capital. If they go to 10 crore, 20 crore in 2 years' time, then they have a choice to go to the main board. So somewhere I don't see that.
It's appreciated, sir. Actually, what we noticed generally was, if you remember that even on the employee quota reservation, which we used to have much earlier, we talked of 200 shares to be the market lot. And what we typically faced in some of the companies is, SMEs definitely not, or really very small. There are large companies which do about 160 crores turnover profitability and employ about 2,000 people. Out of the 2,000 people, there are about 100, 150 people who are key to the business, and they are not in a position to afford a luxurious 1 lakh and 2 lakh investment, though they know the company. But they would like to gradually increase their investment in the company. Should there not be a way that they get participation? Because we want the attrition of employees to be arrested and all. Some incentive to them, because we have been talking to these people, and whenever we go talk to them, the employees start requesting by saying, sir, why should not this 1 lakh be lesser than this thing? Because we would like to continue with the company. Yes, we can pull up our this thing for purposes of market lot, if it is a requirement, if it cannot be relaxed. But at least allow me to take that much as a participating thing in the company in which I know. And I've been there with the company for 20, 25 years. Would it be possible something could be done on that?
I appreciate your feedback. In fact, your question as well as the question asked earlier, they both seem to suggest that we do not know how to differentiate concepts or different platforms in our mind. We have got so used to the exchanges or the main board as they exist that we want everything to finally converge to what looks like the main board. So let us understand that the intention here is to create something different. Now, if an SME company finds constrained by the conditions imposed in an SME exchange, by all means, the point has come where they have to evolve and grow out of an SME nomenclature and become something which is as normal as what we see on the main board. At which point of time employees may choose to buy 1 share or 1 lakh shares, it's up to them. So, I think the point here is we are moving towards meeting the needs of SME and the investors in the SME. And when the conditions are coming to a point where either the SME or the investors find it, difficult in terms of growth, that point has come when they should probably think of moving to the main board.
Sir, I am Ashok Ajmera. I am the Chairman and Managing Director of Hachcon Global Services Limited. My question is to Mr. Sinojaki. The SME exchange or SME capital market in India is very nascent stage, whereas you at ADB have got a larger experience of most of the other exchanges, SME exchanges in the world. What we are initially facing here is the confidence of the investors in the SME issues, the confidence of the institutions and the banks which are otherwise participating in the main board issues is also very less here, and the corporate governance questions. I would like to know from you, because the presentation did not give the overall overview or insight of those problems, that what according to you are the problems which are being faced or which are faced by these SMEs in other countries, and why they are declining. I mean, why the situation is not encouraging like the overall growth of the capital market. Which are the shortcomings, which are the problems there too, so that we can analyze here and answer those questions to develop our SME markets here in India. Because as a merchant banker, I also did one issue on the SME platform here, but I found some of these problems. So can you share your views to enrich our knowledge and ourselves? Thank you.
So thank you very much for the comment. And Yeah, actually, the discussion of this SME capital markets very debatable. So because we are always focusing on the typical models of this capital markets. For instance, how to attract investors, how to involve these potential issues into the market. So from a viewpoint of profit seeking, models or something like that. But the discussions around the SME capital markets are quite different. So usually these discussions should respond to this national strategy or policies on SME sector development. So which means the discussion on SME capital markets includes the, the social aspect. So more targeting the macroeconomic impact and also the social welfare enhancement. This is quite different points from the development of this main board was typical capital markets. So therefore, we need to develop such a specialized equity market was a bond market for SMEs from a viewpoint of social aspect and other demand-driven manners. So it's because the background of the discussion on the SME capital market is coming from the funding issues. So how to enhance financial accessibility for SMEs? This is the background of this discussion. So therefore, we tend to focus on how to develop the primary market rather than the secondary market. That's why some of the countries have unfortunately experienced this failures of developing this SME capital markets because they are only focusing on the development of the primary market or funding issuance market, so not taking care of the secondary market. And also, unfortunately, getting the little support from the government and the policy side. So then this to develop this SME capital market, government policy support measures and strategies for SMEs capital market development is very necessary and key to developing these discussions. So this is quite different point. So from the general main board development discussion. Okay, thank you.
Thank you, sir. I mean, we can take the answer forward, sir, here for our Indian regulators and the stock exchanges that yes, some government support or some, even if looking from the social capital market point of view, some of these SME companies are in the field of education, infrastructure, hospitals, colleges, learning institutions. At least there some kind of formal support mechanism can be found whereby all the institutions, bank and the public money to the extent of maybe 10%, 20, 25% can come in the primary market in this SME issues so as to boost the confidence of the other general investors in the market. Thank you.
So let me add one more thing about the discussion. And during my presentation, I tried to discuss the two innovative types of the market infrastructure, so saying this equity, exercise equity market and social capital markets. Those are totally different issuing and trading venue separated from the regular market of stock exchange. So why? So this venue is quite important for getting the promising issuer base to the regular market because the stock exchange seeking to get the good quality of potential issuers to enhance the transparency of the market. So to this end, preparatory market for or a learning venue on market rules and obligations for SMEs are very important to absorb such a good quality of issuer base in the existing stock exchange. So I think this is a synergy effect. So developing both the preparatory market and existing stock exchange market. So this is back-to-back issues. so in the SME capital market. Thank you.
Good morning. My name is Avinash Chandra. My name is Avinash Chandra, and I represent CARE Ratings. I've been part of SME rating group at this rating agency. There are two questions which I wish to raise. First, it was not very happy to see that in our country there are only 15 SMEs registered. It does say a lot of story. My second question is that I want to understand, is there a correlation between the capital market for SMEs and the bank lending to SMEs? I further wish to be guided. I believe that there has to be a very greater market that is related to bank lending to SMEs. Then I think SMEs in our country will be guided to capital market. Now, some of the reasons which were shared with us, I wish to add, and I wish to be guided further. Are these reasons really in our country prevailing? Less risk appetite from the company as well as the investors of this group. Second, this is a very hard-fought finding which I, over the years of, say, span of 8 years have gathered. Reluctance to let go the command. It could be in corporate governance things. It could be the command on the finance and accounts. And then third and very important, which I was expecting in some of the slides of ADB should be there, the transparency level. I would like to know how is the transparency level in the countries wherein you have been conducting these studies, and how is the transparency level of our SMEs, and what do you see the role of companies like us, because you have very categorically put rating agencies in the questionnaire which you have given us to be filled in. So please light upon these things. Thank you.
So thank you very much for the comments. So very impressive. And also, so I tried responding to your question one by one. So first one was, so you pointed out, so only 15 SME is registered in this SME exchange. So which means, so you are worrying about the little demand on SMEs for equity financing or something like that. So, but I think this is a very good starting point. So once such as 15 SMEs so grow further by making use of the direct growth capital through tapping the SME exchange in India, and then maybe other SMEs may coming to the SME exchange. So this is a mechanism of creating the demand. So demand creation mechanism is very important to develop this SME capital market further. So this is the starting point. So my point is how to make a success story for SMEs to tap the equity market. So then this SME exchange was just launched last year. So 2 years ago, so this is still in the early stage of the development. So we need to evaluate this market platform, taking account of around 5 years or around. So, and the second one is SME capital market. Is it necessary or not? So because, as you pointed out, the banking finance, bank lending is more important financing modality for SMEs or other enterprises. So just taking account of this bank-centered financial system established in Asia, including India. But as I mentioned during my presentations, the two core pillars very important. The first one is the bank lending efficiency. And the second pillar is diversification of financing modalities for SMEs. So because we cannot expect any possible economic shocks like a financial crisis. So this is quite a different situation as compared to 10 years ago or 20 years ago. And Asia has been rapidly growing, with long-standing. And of course, these growth-oriented SMEs have been so involved in this part of the economy. So it is very easy to imagine that some of the SMEs are willing to tap directly growth capital through capital market. But at this moment, such a segment is very small in scale. But if we provide such a direct capital market, capital financing, growth capital funding venue through the establishment of the special equity market, then some of the companies have a chance to grow further. So this is a very important mechanism to provide the chance for growth-oriented SMEs to grow further through directly tapping this growth capital. So far, there was no such financing venue developed in emerging Asian countries. So that's why we need to take care of developing such a new approach of diversified financing modalities beyond the conventional bank lending for SMEs. So again, I must stress the two core pillars: bank lending efficiency and as well as diversification of financing modalities for SMEs. Those are very important key to develop this SME financing, improving the SME's access to finance, and eventually it contributes to increase, strengthen the resilient national economy in India. Okay, thank you.
Sir, can I have one small question to you, sir?
Hello. Yeah. Just let me give you some answer on this 15 companies listed. By the time the slide was made and slide was presented, 7 more companies have got listed. So you can see the activity that is pretty high. Why India has only 15 companies before the slide was made and 22 companies is because it's very young. The SME market itself started in March of 2012. It's less than 1 year. People are getting used to it. People are trying to figure out how to raise capital and so on and so forth. Even investment bankers, market makers, any system takes some time for the regulations to get sort of settled, the participants to become aware. And so for me, this is basically what I call a very, very early stage of the development of SME. It is also true that we need to take care. We don't allow too many unscrupulous people into the market. We also don't allow too many investors who are not supposed to be in the market, irrespective of whether they are employees or otherwise. So basically, idea is, if you don't do that, we already had some experience in 1990s where people came, collected money. Some of them vanished because they wanted to vanish. Some of them vanished because they couldn't run the companies. But because the small investors had come in into those stocks, and that's where we had this huge issue which we are still grappling with over the last 20 years on what to do with vanishing companies, right? And so when we do SME now, which is still, as I said, it's still evolving and very, very rapidly, how do we create the stringent norms, knowing fully well that it's a high-risk capital, or rather very high-risk capital, and only people who can afford and people who are knowledgeable about this markets, they come in. It's taking some time, but if you open the floodgates, it can actually be what I call detrimental in the long run. So idea is, whatever pace, ultimately you have to walk with your pace. You know, Kauva chala hans ki chal, it may not work. So somewhere we'll have to take measured steps, move along, take everyone in the right frame of mind that this is the market where you can come, you have to behave nicely. These are the corporate governance. In fact, there are issues, as you raised, which are true on corporate governance for main board as much as it is for the SME. And that is what we need to train people. We need to get the expectations right of all market participants, whether they are companies, whether they are investment bankers, they are market makers, investors, the regulators, the exchanges. Everyone is now kind of going through that iteration. And once that settles, hopefully we'll see many more companies. But it cannot be that you have 10,000 companies and all of them bad, right? So somewhere I think all of us need to be very much aware, and all the processes, procedures, including credit rating, as you said, Even the companies which are listed on BSE SME, their reports, research reports are provided by various institutions like yours and put on the BSE's website as per the SEBI's recommendation. So somewhere all these mechanisms are being put in place for making investors aware, making investors take correct decisions.
Thank you, sir.
Let me add one more thing about, I could say so there was substantially no graduation and growth cycle of enterprises in Asia. So, which means, so from my experience in Indonesia, for case of Indonesia, so venture capital companies have developed and their business through the hands-on support, providing the direct loan. But their main business is just providing the direct loan to SMEs, not capital participation. Why? So because there was no appropriate market venue for their market participation. So that's why once the specialized equity market for SMEs is established, some of the venture capital companies have developed their new business plans to go to the capital market. But in some countries, such as basic infrastructure is lacking. That is a very critical point. So that's why if this specialized equity market or capital market for SMEs is created, then some of these segment of the business sectors like venture capital companies have made new business models and also developing their private sectors. So this is quite synergy. So, but in India, maybe the different aspects might be happened. So, but providing the new financing modality will create this synergy and also the stimulating the business sector further towards the resilient economic growth. So this is my perception. Thank you.
Good morning, sir. I'm Pramod Shah, former chairman of the Institute of Company Secretaries, Western Region. So this question is to Ms. Ashish Chavan, sir. Sir, as you have been doing, sir, investor awareness program around the country, sir, why not something on SMEs could be done by which we can imbibe some education and then whatever the lacunas and the infrastructure lacking, labor accounting lacking, all those things could be taken care of by some literature which could be spread over. And so you can have a closer coordination with the merchant bankers and also with the market makers who have been creating sometimes some problems. So my suggestion is to do it on a wide scale, which will bring more companies to the listing also, sir. Thank you.
Yeah, thank you, Pramod Bhai. It's a very good suggestion. And we have been doing this. In fact, why BSE has been so successful in the SME in the early stages, because we have combined with all Institute of Company Secretaries, Institute of Chartered Accountants, the CII, FICCI, Maharashtra Chamber of Commerce, across SME clusters. We might have conducted by now in last 1 year around 500 programs on SME alone. So what you get to see usually if you are an investor, you get to see only investor awareness seminars. If you are an industrialist, you get to see BSE's SME programs. It's just that, as you said, probably we'll have to get you involved in both sides. So, which is a good idea. This is this ADB event today is one of that initiative where we combined with ADB to get merchant bankers, market makers, institutes, companies on the same sort of hall so that you can discuss the issues that relate to you. But effectively, we need to do much more. In a country of 120 crore people, whatever you do is less. And we are very, we are very well aware that this is just the beginning. We have a long way to go. Thank you.
Morning all. This is Mahavir Lunawat from Sarthi Capital Advisors. At the outset, we must compliment the regulator, Mr. Raman present out here, and Ashish Chauhan, Mr. Bala, for a wonderful and very facilitative regime for SMEs. Like to us, 2022 companies getting listed in the first year of SME platform, that too in times when, although even main board companies probably are not able to see success, so 11 companies getting listed on main board versus 22 companies or maybe more putting NSE, BSE board together. I think it's a very good progress from our perspective. But so since you are here, we just thought we'll take your insight on, like a lot of emphasis on ADB study is on alternate markets like pink sheets, OTC, organized OTC, alternative markets. So from your experience, your perspective, both regulators and exchange perspective, you think that is it the right time for India to have such kind of markets developed, and this kind of activities will kind of check the some of the unfortunate events which we are kind of witnessing through chit funds and all. So giving a kind of organized shape to these activities will be a kind of booster for SME funding avenues, as well as check some of the undesirable activities which are unfortunately seeing nowadays. Thank you.
No, I'm happy you've got similar ideas as what is being discussed between us and the exchanges, as well as the wider working group. The intention is to provide alternative sources of capital. And I think, as brought out by somebody earlier, there are limitations in bank funding, though I also believe that bank funding is a primary source and we do not wish it to disappear at all. In fact, what we have discussed with both IDBI and SIDBI is they on their own are trying to work out a better SPV structure whereby banks could invest in an SPV, which in turn, or banks could say, let me say, lend to an SPV, which in turn would then invest in SMEs. So, there are a lot of sort of blueprints that are being developed, and I'm very happy to hear that, we are getting more innovative, because I think with priority sector lending being such a prominent program in our country for banks, banks would also be very benefited by, sort of multiple lending avenues, which would then fit into the larger scheme to be able to provide capital to SMEs. So that is a very important plank, which I really hope that it takes off in a big way. The alternate investment funds, which I think you alluded to, is again something which is being pushed by SEBI. In fact, I think 47 funds, what I read in the media, have got registration. It's a very important part, and I think from what the ADB presentation has shown, by whatever name you call it, venture, AIF, they all come to the same thing. And they have seen in their study how important this particular type of funding is for different types of SME. So going forward, I think we are very clear in our minds that we need to get this kind of sophisticated funding, and sophisticated is, the people behind the funding. So we would be happy to have such people come in and provide further funding at various stages. And that's why the new initiative that was announced in the budget also has a very important role to play.
Good morning, I'm Neeraj Kedia, representing Federation of Indian Small and Medium Enterprises. My question is from Dr. Shinozaki. I was going through this table in which you have depicted the market capitalization of various countries vis-a-vis the volumes traded there. In Thailand also, it is 200% of the market cap which has been traded. To my limited knowledge, generally the floating stock which is traded over the counters is generally 10-20%, or in case of SMEs this could be 30%. Out of that, it is touching 200% of the market capitalization. Can you please throw some light on who are the secondary buyers, particularly in Thailand, because China and Malaysia are the matured, now going to be matured economies, and rest all are the matured economies in this table. I am keen to know about Thailand, please. Thank you.
Just to make sure, you were pointing out this which slide number? Yes. Okay, so as I pointed out, and also as I pointed out during my presentation, market performance is different by country. And so I also pointed out this, especially Thailand, Malaysia, and Singapore, because they have developed this AIM type market or a sponsor-driven alternative market. So for SMEs, but their performance are not good so far for a long time, as I mentioned. So why? So there are so many incidents and the background for such as bad performance. I think the one of the critical issues would be the global financial system uncertainty. So nobody can expect the unexpected events like a financial crisis or nobody anticipates accurately these possible economic shocks. So then the such kind of AIM type market with this international market for professional investors. So professional investors are always very risk conscious. So then the very hesitant to tap this risky SME market. So especially during the time, so in this difficulty time of the financial crisis. So that's why the recent and past financial crisis creates such a high perception of the risk management for investor side. So this is one of the backgrounds for the stagnant performance of this AIM type market. So and so in parallel with that, so I would like to stress one more very important thing. So I also mentioned during my presentation, our financing needs on farms are different by stage of the growth cycle of enterprises. So this is quite an important matter because there was no single solution of SME financing. So therefore, the development of this new approach or alternative financing modalities for SMEs is one of the very important key policy topics. And even if at this moment, some countries have failed to develop this SME capital market, but we need to discuss more carefully about what types of market infrastructure and systems are appropriate or fit to the target SMEs. So this is quite an important discussion to be developed in the further, so in the future.
My name is Narsimhan. I'm a council member of the Institute of Company Secretaries and I'm practicing company secretary. Just a quick question to Mr. Raman as well as Mr. Ashish Bhai. Looking at the kind of story which SME Bombay Stock Exchange has given, 90% of those companies are trading above the listed price. So that is highly creditable. And I'm sure you would all recall the concept paper which was put up by SEBI on safety net mechanism, where it spoke about more than 77% of these issues which got listed on the main board were selling below their issue price. And more than 50% of those were selling more than 20% less than their issue price. Now, in other words, what is that we need to understand from this story? Is it that on this SME platform, because of market making, there is a kind of a safety which is available which ensures a better return to the investor? What is the real story behind it? And why not we also replicate that story in whatever sense your study finds out on the main board as well, so that gives a lot more confidence to the investors to come in. I don't know the aspect of safety net mechanism, whether the thought process is still in the minds of SEBI or not. And you do have another kind of a safety net mechanism in the form of a green shoe option, which because it's optional, not very many companies are using it. So this one question to you, if you can look at it. The other one was on the fact is, Ashish Bhai really clarified that a company wants to list, it can list both on emerge as well as, but under the regulatory framework, when you go for listing on the main board, then you have to appoint a stock exchange as a designated stock exchange to complete the formalities. In which case, Where there is no specific option of that identified in the regulations over here, what should an issuer do or a merchant banker do if he wants to get his companies, the company listed on both emerge as well as, and how do they proceed in terms of identifying a designated stock exchange between the two? Thank you.
You've posed two difficult questions. So, with regard to your first observation, I think it's an excellent observation. And it sort of, makes us think in the other way, that till now we were wondering how to make SME look more like the main bourse. And now we are saying how can, SME sort of infiltrate the main bourse and bring some characteristics of that. If you have time, I'll be happy to conduct a study of that through you. It'll be very useful to understand, because I by your point, have we done something, or are the characteristics of what we have put into the SME somewhat different that has brought about such an outcome? Well worth looking at, whether it is a sort of restriction of the lot size, or is it that the due diligence, in this case, the due diligence probably by the exchange along with the merchant banker has been of a higher level. I don't know. It's, but yeah, it's certainly worth looking at, and we would certainly like to look at that. But with regard to the other point that you raised, with regard to if a company wishes to also get listed on the other platform, I would probably say that it's something that the company should explore if it does wish to do so. Because, in the SME exchange, from the way I look at it, there is a much greater level of involvement of the exchange in identification of companies and subsequent listing of companies. So it could be interlinked with your question number one, that because of this greater involvement and due diligence probably by the exchange itself, maybe it imparts a certain amount of higher credibility amongst those companies. And I would at this stage not venture to, get into the concepts of multiple listing. It's something which companies may like to explore because there are costs involved in multiple listing. But it is a very significant point that I think let the exchange also show that they can bring a greater amount of involvement and therefore, bring good companies to an exchange. And it probably is a good way for exchanges to also, provide a certain differentiator between themselves. I mean, I'm not a votary for, exchanges looking exactly the same as each other. So why not allow exchanges to go down this path if it's something which is emerging a little differently?
And let me add one more thing. And of course, the capital market is a place where issuers meet investors. So that's why to attract more investors, to attract more issuers. So this is very important to develop the safety net mechanism. So as I pointed out. So this is quite a difficult question. So we need to develop this matter further. So how to accommodate these demands on potential SME issues, and also how to make a transparency in the market, and also showing the appropriate manner of the safety net mechanism. So this is a big priority to be developed in the future. Thank you.
Sir, I'm sorry to interrupt. We'll take a short break here, and we will be back for an open floor discussion by Dr. Srinozaki. You may ask any more queries that you have. Our dignitaries here will respond to it. Sure? Yeah, we'll take this one.
I am Rajendra Kanungo from Ashika Capital. We are also one of the merchant banker. My small question, there was in the budget speech, there was an announcement of the direct listing on SME and with some informed investors. So I just want to know whether any such guidelines are under process or already prepared.
Yeah, I did speak about that in the morning, and there's already a working group which is underway. And we are looking at what sort of contours and what sort of substance we need to bring in terms of regulation in order to create this. So I'm happy to take suggestions from yourself as well as anybody else. It will help us come out with something which is, more sort of practical and that addresses the need. The whole point here is really to address the specific need of SMEs that has been expressed, and therefore we'll be happy to take suggestions.
Thank you.
Thanking everyone for their participation. Ladies and gentlemen, please make yourselves comfortable. We will be back shortly for the open floor discussion by Dr. Shinozaki. Thank you. And reminder for all of you to kindly share with us your responses for the questionnaire shared with you on behalf of Asian Development Bank. And now, without taking any more of your time, I would hand over the next session to Dr. Shigeru Shinozaki, who will be moderating the open floor discussion. Over to you, Doctor.
Hello. Oh, thank you very much for staying here. So, despite this lunchtime, so at noon, this session was a more frankly basis. We will discuss the open discussions about the potency of this capital market for SMEs. I prepared key questions comprising 6 segments. So, following these key questions, we would like to make a very frank discussions with you. Okay, both the asset to make panel discussions, taking these opportunities about this discussion session. And okay.
I would also like to Mr. V. Balasubramaniam, Mr. Mahavir Lunawat, MD CEO, Sarthi Capital Advisors, Mr. Ashok Kumar, promoter and MD Lotus Knoll Wealth and the IPOguru.com. Can we have your presence, sir? Thank you. Over to you, Dr. Shinozaki.
Okay, so let me start this panel discussion. Okay, so let me start the panel discussions here. Okay, so we prepared key questions comprising 6 segments. So first question is this, to just confirm the current condition of the SME capital market policies in India. And so firstly is, I want to show this slide here. Okay. So is SME capital market development a policy priority? So we have learned definitely, so this is a policy priority in India. So then this question, so moving to this, what types of policy measures and regulatory actions will be necessary to develop an SME capital market? So I would like to ask all of you of this general views of this from a viewpoint of the policy matters.
Thanks. So I think this is a relevant point. In fact, this is something which I think India has taken upon very seriously. In fact, there have been quite a few reports, and primarily the Prime Ministerial Task Force in 2010 actually started organizing things in a much more institutional manner, and they had actually prescribed the creation of an SME exchange. So this becomes a formal kind of a platform where small companies could actually come and list, and they could actually create a mechanism by which they will be visible to the common people, and also over a period they could also, like the concept which you talked about, organized markets. So they come into this market, and over a period they can mature, they can learn how to deal with the corporate governance mechanism, and then eventually shift to the main board, which is when probably the real investors or the larger number of investors could start coming in. So this is one of the key things which is there. And again, from a policy perspective, the SME segment obviously is extremely important. Purely from the landscape that as a country today, a large part of our GDP actually is something which comes out of the SME segment, whether it is manufacturing activity or whether it is a service level activity. And to that extent, it's very important because we are also from a demographic perspective, given our huge growth in population, especially the population which is getting added to the working class, SME is obviously the biggest one in terms of employment generation. And to that extent, it is very important to nurture this segment and give it all the policy, all the boost and all the fillip which is required to actually ensure that this thrives in our economy. So from that perspective, definitely the platform is the exchange creating platform is a great idea because it gives visibility to company. As we saw in the morning discussions, we have almost in less than 1 year, I have almost 23, 24 listings. And as we talk about another 7, 8 listings are also in the pipeline. So we are growing at a very rapid pace. And we think that in the coming years, we'll start seeing hundreds and thousands of companies actually coming onto the exchange platform. And here, one of the big policy fill-up which has been given is that once you come on the exchange platform, you get a large kind of a tax break in the sense that angel investors or PE funds or initial informed investors who actually invest in that could actually get the benefit of a long-term capital gains, which is basically zero at this point. If you don't list it on the exchange, if it remains an unlisted entity, if one exits, he needs to pay a pretty large tax incidence. So that becomes really a good kind of a booster to ensure that these companies become more visible, get listed, and also are in the path to actually slowly move toward the main board.
Just to add to the points that Bala's made, in the 20 years that I've looked at IPOs, one of the points that Ashish made during his talk was that there's very little difference between the promoter tries to hold on to most of the key functions. Unlike in overseas markets, non-SME markets, where you have a difference between the ownership and the management. Here, the ownership and the management is one and the same. And in case of several SMEs, you also see key functions like finance and tax and other things also held on to by the promoters. I think this becomes a transition exchange, besides the very obvious points that this is the exchange to be on for a SME. It also becomes a transition exchange for someone to go on to the bigger platform. You would also see better corporate governance on the bigger platform once a company has gone through the SME exchange. And I think it would be better for the premier boards also if companies go through the SME exchange and then graduate to that. Yeah.
I think there are two questions. One is whether it's a policy priority. I think the answer is very obvious. Coming out of Prime Minister Task Force recommendation, market regulators, policy framework. It also forms part of the India's 12th 5-year plan document that there has to be matured SME platform. And what measures, I think the entire market is in evolution phase, and we have seen last year as kind of beginning of SME markets in India. On an average, I think every 2 months there was a circular or amendment in the regulatory framework by SEBI or exchanges. So kind of the entire machinery, be it Ministry of Finance or market regulator or exchanges, are watching very closely, and not only watching, they are facilitating SMEs. And while moving with some of the very progressive SME entrepreneurs as merchant bankers, I must share that a lot of times the funding has been of the utmost constraint, particularly to SMEs in India, where bank finance beyond a point is a limitation. Equity, there was no route. So when that SME exchange got launched last year, I think a lot of people were very excited, although there were apprehensions to begin with. But as the market matured, as the systems developed, as the regulations developed, all those concerns, I think most of the concerns have been addressed, and people are now coming forward in larger numbers for accessing capital markets. Now I think we need to make more awareness of SME, and also we need to kind of see as to how the new alternate platform which the FM has announced in this year's budget of SME IPOs, SME listing without IPO, that is something we need to see whether it will be kind of on the model of OTC or pink sheets of US or AIM of London. But I think both the answers are in affirmative in terms of it's a policy priority, and a lot of regulatory developments are being witnessed by Indian stakeholders for SME capital markets.
Thank you very much. Thank you very much for the comment, and I get a very positive response from your side. But still, I'm wondering one point, because the recent practices and the efforts of developing the SME capital markets suggested that the establishment of capital market infrastructure itself is not enough to attract potential issuers and investors. So, for instance, we have learned the very interesting practices in China. Chinese government has developed this SME capital market. But on the other hand, Chinese government also has developed this strategy to increase the number of CPS that support SME's internal control system. So this is quite a synergy effect we see, because increased number of CPS will also very effectively support this SMEs tapping the capital market. And then for instance, the SME board and the Shenzhen Stock Exchange successfully increased the number of SME listed companies. So such kind of development of a professional base that support SMEs disclosure process or internal control system is quite powerful. So what do you think about in India, such kind of supporting infrastructure will be necessary to be developed, necessary to be supported by the government? And in that case, what kind of concrete measures would be effective? For instance, providing the tax incentive schemes, or providing the special preferential treatment for accounting firms or certified public accountants that support SMEs, usually they're providing the tax incentive or something like that. So do you have any ideas about the concrete measures on that?
We may not have very elaborate kind of incentives rolled out to the accountants, that is this, like you mentioned CPAs, we have chartered accountants. But one of the institutes has been pretty much in the forefront in terms of helping on the SME process, which is the Institute of Company Secretaries of India. And they have actually created a SME kind of a practice also within the institute, and they have been actually working in providing due diligence and helping the promoters in terms of ensuring that whatever are the minimum regulatory requirements which are required to actually file with the exchange, that is something in place. Apart from that, we already in our country we have a existing kind of intermediary structure which enables any company to come to the capital market, which is through the merchant bankers who are recognized and who are the official kind of intermediaries which are appointed by SEBI. And in some sense, both these kind of professional entities are making this transition easy. Obviously, more could definitely help, but I think we are right now in a adolescence process. We are just in our infancy. We're just starting off. I think over a period you will start seeing that these efforts start bearing fruit, and you could see more and more companies actually not getting worried about too much of the compliance or the regulatory measures, and they understand that this is something which can be simply done as part of a tick box kind of a thing, so that it becomes easier for them to come to the market as well.
Also, since the SMEs target a very niche kind of audience, I think there could be some changes in the rules, like the obvious one about the necessity of an ad in a leading national newspaper and other things, which is a bit of a waste for the kind of niche audience that you have. You're not appealing to the mass audience. Also, the second fact is that I think sooner rather than later it will have to be banks and financial institutions that take a lead role alongside the merchant bankers, because the onus cannot be entirely on the merchant bankers to carry the issue through for 3 years, or rather market make for 3 years. So probably these are early days, and that regulation or change will come with the passage of time. I think these are two key things to my mind that could be changed.
I compliment the views of Mr. Balasubramanian. Yes, like being part of governing council of ICSI, we conducted very recently a roadshow, as recent as on the Friday itself, where Mr. Ajay Thakur and Mr. Balsara, who's head of listing, were there from the exchange, and it was kind of a good discussion with merchant bankers. I think there have been a conscious efforts, both from government as also from the regulators, to give more and more kind of fillip to this market. And like for example, one big tax incentive which was given last year, that the private equities who are investors in companies, they can kind of exit as part of IPO. They can offer their sale as part of IPO on a tax-free basis. So earlier the notion with private equities that they would probably would like to have their investee assets more of unlisted. Now I think more and more tax swaps have been given, and they now prefer listed companies rather than investing in unlisted, because both entry and exit taxes are kind of nil, significantly reduced if the company is listed. So those kinds of incentives are being given. There are also incentives by MSME ministry, like for example, like you have had elaborate discussion on corporate governance and systems and processes. So in India, like fortunately or unfortunately, majority of companies are family-owned traditional businesses. So government is aware of this, that they need to be kind of provided with a lot of incentives, a lot of attractions to kind of have the professional systems in place. And there are, you'll be surprised to note that there are policies and there are schemes floated by the Ministry of Small Enterprises, that if a company goes for, let's say, ISO certifications, or if a company goes for credit rating, the expenses are borne by the ministry. So of course there are schemes, there are a lot of SOPs, but yes, the more and more awareness and more open dialogue like this, and also some kind of knowledge sharing like how we are doing, I think this is a great step taken by you as ADB, and if we have more and more dialogues like this, interactions like this, I think